Hello traders, this is Mike Hamilton from Trade the Easy Way, and you are looking at a chart of the US jobs showing the lower highs in the run-up to the 07-08 crash, the devastation to the US job market in 09, and a steady build after this little blip in 2010 from 2011 to date. You can see a series of higher highs, little drop off of late so far into this year. That's not unusual in the first half of a US year. So on Friday we have new non-farm payroll. If this comes in at a reasonable rate, this could excite the market and get it going. Even a weak number, bad news in this kind of market, could be good news if the market perceives that the rates of job growth is okay, but there's a lower prospect of a rate rise next month. But overall, you can see that it's healthy. We have some peaks, but we have dropped off. So non-farm payroll Friday. So let's just look at what the effect is on the markets. This is the dollar index. You can see on this monthly chart on the left, weekly in the middle, daily on the right. Right on the daily, we've come in contact with the 200 EMA, and at the moment we are fading it. We are dropping away from it. So here in March this year, it came in contact with the 200 EMA and dropped off, and the highs were sold, and so far it's a steady climb as we get towards this period. At the moment we are fading that 200 EMA. You can see we're right on this, on the weekly chart. We closed 4 weeks higher into this 2050 EMA cross, and the monthly, obviously it's the last day of the month tomorrow, is potentially going to engulf previous months and leave us with a strong figure, unless we see some heavy selling in the dollar into the last day of the month. So what's this telling me? It's telling me that we're at a pivotal point in the life of this dollar, and if we can hold up here into 95 area, we could bust higher. Obviously another lower close below 95.60, and then this could just roll over. If we put the fibs on this, on the last range, you can see that it's actually fairly pathetic. We're just holding into this 95.30 zone. We could, unless we can start to close above 96, we could just roll over. Normally after a 4-week period I would expect some sort of breather. It's just a natural, if you look at the way we've had 4 blue bars here, it pulls back. You see we had, it's not a clear pattern, is there? 3 or 4 clear bars here to the upside, and we drop back. Okay, so we're as usual when you go into a big piece of data, we're right on the line. But I mean, that monthly selling, if that monthly holds up into the first half of this week, particularly if we start closing on 96, that bodes really, really well for a strong dollar. So I think let's have a look at the pound US dollar. At the moment we are right up against a key piece of resistance here. Today, with very little action in the market, only Central Europe around, not US and UK, we have closed above the Sunday open, and we've closed above this 200 EMA, this fake line here. We hold this in the middle of the week, and we could challenge 147 and head back up to 148.60 area. What do I think is going to happen? I think we are diverging up here on the daily chart. You can see we've had a higher close, a lower close than stochastic. Monthly chart is divergent for the bulls. So we've had a lower close here, but a flat level here on the stochastics. We are crossing in the MACD. We've crossed and we are open on the weekly MACD, coming to a high level here. So it's all, let's see how we close on Tuesday, but on the face of it, early indications are that we could be holding up. If we now go over to the Euro US, monthly at the moment is looking pretty ill, with 1 day to go to save it. If we go, however, flick to the daily on the fibs is taken from quite a way back, because we are in pretty much a box play. The high of autumn last year and the low of March last year. So basically, this is last year's range. That's the high of 2015, that's the low of 2015, and we are just above 50%. So the euro is looking good. So that leads me to what can I take from this? What I'm going to take from this is this one here, euro yen. If this monthly closes above 123, I think we're going to quickly go to 126. We've got euro rates on Thursday, non-farm payroll on Friday. We're right up against the line. A very, very positive day with just Central Europe around. If we get a pullback on this one, I will look to take that. 133 would be a nice place to get in. Anyway, any lower could be a potential gift. We've come under 123. Let's see if we can come into this 2 EMA, or at least the top of the channel on that one. Pound yen is looking equally good. If we watch out for where we close on the monthly, because we have been in a box over the last 3 months. I am swing long this one, looking for a close above 108. This is the weekly. We close above 50% of the weekly on the Aussie New Zealand. Flat today. A lot of data for Aussie and New Zealand, even over the next 24 hours. So let's see if we close above 108. Then I'm going to hang on to this, start buying more dips, and see if we can get into these high levels. If this works out well and we get a nice monthly close, I would look for at least 120 on the Aussie New Zealand. Otherwise, if we can't hold up here, we are potentially going to come down to parity. But that weekly close suggests that I'm in with a shout. Alright, so I like the euro yen, and I would actually swing trade this based on that monthly chart. If that monthly chart holds 123, then we could look over the coming weeks for another jump at least of 127, 130, and possibly even in the back end of the year coming to 140 plus. Okay, switching to, I looked at the dollar. Let's look at the gold. Is just coming into this main support. We're testing the 2 EMA. First time we tested that from 1st of Feb. I think, actually, let me update this fibs. I think what's going on with this is critical based on what I just said on the dollar. That is a massive amount of support, this 1200 bucks. So I would look for, and look at the way the stochastics is potentially turning at the bottom there. This is a huge level, decent level of support. It's resistant, was resistance in June last year, it's now support. If we hold up here, I think we could at least come and retest 1250 on the gold. So that looks bodes well for certain market sectors. The oil coming to 51.30 is a high. It's a resistance area from October last year. It'd be a third good higher close in the monthly if we hold up. I think this market might hesitate until we get Friday out of the way. In the meantime, yeah, it is steadily climbing and could burst up there before Friday, and who knows, maybe even go higher on Friday's levels. But we need to just keep an eye on this. So if you're looking for a pullback to get into this market, I would look for 46.80. I would look for that to drop a couple hundred points if you want to get in on this, and let's see if that can close higher. Okay, indices. Very, very strong weekly bar there, and the monthly is not very well drawn. So let me draw that again. I do not like to see sloppy fibs because I rely on it so heavily. 18,365 is a resistance area that is potential sort of reversal signal there, but this close, or the movement we've had last week and the close in very narrow window of today's trading has held that up. We drop below 17,880, then watch out. So as you can see these key figures, we are right on the line there, so I'll keep you up to date with that one. DAX, however, is already right up against the line. Again, and these pips are not up to date as they should be. Okay, so you can see we look as if we're going to test 10.4. At which point we need to see if that can sustain that. Stochastic is looking high. That's a strong weekly figure there. The pullback would be about 10,100. Okay, so I would hold fire on that if you're not in that, and just see where we are tomorrow. But a good healthy dip could be nice to get in on this. Right, I hope that helps, and see you in the room tomorrow.